Hi everyone, welcome back to Infinity Wealth. In this video, what I want to talk about is how you can present to your JV partner a deal, basically. So first of all, what's important and please share this with your JV partner. First of all, if you look around the world, what's going on right now, you've got sovereign debt yielding negative in the world. So $12 trillion worth of negative sovereign debt. The other thing that you've got, and which is why I feel it's quite important, is you're going to have another round of QE. The global economy is slowing down. That shouldn't stop you from investing. With the act of QE, what's going to do is it's going to drive up assets prices even more, because that's the purpose of it. So the money that you think is safe in the bank is not, because you're losing money because of inflation. All the governments around the world are saying inflation is running below 2%. But in real terms, if you've gone shopping, you'll find out that inflation is actually a lot higher. Things are shrinking, rather than actually being priced up higher to make it look as if it's not increasing in price. So inflation is a core important part. The other part that's really, really important is the fact that when you have money in the bank, most people have security. I've got some money in the bank. And I'm not saying having some money in the bank is bad. It's good to have some liquid cash. But it's when you get to excessive amounts, money generates more money. You've heard that phrase before in life. So it is a case of making your money work harder for you than working harder for your money. So in the next set of videos, what I want to do is show you the advantage of working with potential JV partners. So if you happen to be setting on, let's say 100,000, what I'm going to do is run through the video, show you how that 100,000 will make you a better return. So at the moment, that 100,000, if you're in the UK, you might be lucky enough to get 0.75 interest payments, if you're lucky enough. If it's in an ISA, you may get 1%, but it's neither here or there. So if you had £100,000, you would actually, from that £100,000, you would make £750 per year on interest. Okay? Obviously, you'll have to pay your taxes on that as well. But what I'm going to share with you in this video and on the board is how you can actually, working with a potential JV partner, how you can multiply your income, helping them and helping yourself and future-proofing if there is a massive rise in QE and inflation, how your assets will also rise as well. So it's a double-edged sword. So in this particular video, I'm going to actually share one of the principles of JVing, and that is a 50-50 JV, where your potential JV partner lends you the money. So hopefully, potential JV partners, you'll understand what I'm saying now, and you'll be more inclined to actually invest with a particular person that you're happy with. Above all, you must have synergy between the two of you, that you get on, right? And you're like-minded individuals. So sit back, watch the video. I will explain to you step by step on how this whole process would work, how it's going to benefit you, and how it's going to benefit your potential JV partner as well.
This video is for angel investors and will help property investors to explain the power of leverage and growing your wealth. Imagine you have 100k in a bank account. You think that this gives you security. The reported inflation in the UK as of May 2019 is running at 1.9%. This means that if you do not get any interest paid to you, you are losing the purchasing power of your money and losing 1.9% per year. Let's say you get some interest payments from your bank. The best rate right now in the UK is around 1.75% for existing customers. That is with a lot of conditions tied to this, and on average most bank accounts pay around 0.2%. So your £100,000 will generate somewhere between £200 to £1,750 per year. Not invested, you will be losing £1,900 purchasing power of your money each year. Let us assume you are lucky enough to have a JV partner who is happy to do a 50% split on profits. He or she will do all the work. We're going to be realistic with these numbers, so we won't show you deals where you can pull out all of your money after investment. Instead, we will assume as an investor you are happy to leave some of your money in the deal, but share in the uplift of the value of the property and income. Assume the property found is purchased for £50,000, refurbishment costs of £20,500, including purchasing fees and all other fees. The value of this property once you've refurbished the property will be £85,000 and the rental income per month will be £575. So your annual income is £6,900. After 6 months, you refinance the property with the value of £85,000. Once you refinance the deal, you can get a loan to value of 75 or 80%. Let's assume 80 to 20 loan to value, which means you will get £68,000 back. And we will use a mortgage rate locked in for 2 years at 2.2% for a standard buy-to-let. The rental income is £6,900 per annum. Your monthly interests are £68,000 times by 0.022 for the 2.2% mortgage rate, which is locked for 2 years, which is £1,496 per annum. Your letting agent fee, assuming it's around 12%, that is 10% plus VAT, which is £828 per annum. Your insurance is around £240 per annum. Let's also use the figure of 10% per annum for your maintenance. Again, this can vary, but for new refurbishments, they are usually a lot lower for the first few years too. So, £690 for the maintenance. This gives you a free cash flow of £3,646, split 2 ways with you and your investor, which will give you £1,823 each. The money the angel investor puts into the deal is £50,000 plus £20,500, which equals to a total of £70,500. Your investor gets back £68,000 from the £70,500 they have invested. So they've now invested only £2,500, as well as half of the share of the property, which has the equity of £14,500. So in the bank, they earn a maximum of £1,750 if they are lucky. Working with a JV partner, they will get the following after the refinancing stage. They would have only put in £2,500. Their ROI is £1,823 divided by £2,500 times by 100, which is 72.9% ROI. And including the equity of £7,250 joint in the property. Or alternatively, you could sell the property and divide the profit of £14,500, which is more than the investor would get from leaving the money in the bank. And this is the power of leverage. And we will show you even more ways on how to structure deals for potential investors and different methods and strategies which will boost your ROI and your returns even higher. So stay in tune with our channel. We will explain more in the future about different ways of investing in properties such as HMOs, rent to rent, and doing flips, and so on. So stay updated with our channel so you don't miss these videos.
I hope you liked the video and it shows you the power of utilizing the money that you have. Remember, let your money work harder for you. Don't work harder for the money. So as a potential JV partner, you've seen the ideas behind perhaps working with someone who is in the property industry, who has acquired knowledge, and it will be a win-win for you and for them. So I hope you've enjoyed the video. Please don't forget to subscribe to us. Press the notification bell and make sure it's left on. You follow us on social media. So we're on Instagram, YouTube, as well as Facebook. And above all, we are doing this free. So we would like your support. We are here to support you. Any topics that you feel we need to cover, please let us know in the comments below and we'll come back to you. Or if there's things that you're unsure of, one of us will come back to you and say, look, this is how you can do it. But above all, we're a community here to help everyone. Okay? So I hope to see you in the next video. Take care.